Stocks climb after the Reserve Bank of India steps off the hawkish pedal. Realty and power stocks are the big gainers, even as FMCG slips. Mid-caps are outperforming.
Keeping in mind the interest rate trend and the growth outlook, RBI's Monetary Policy Committee has decided unanimously to revise its stance from withdrawal of accommodation to neutral. The move is seen as a signal of the easing ahead, and even as India's growth story remains intact.
RBI Governor Shaktikanta Das warns NBFCs not to chase growth by disregarding the risk of taking on high-cost debt and charging usurious rates. He urges voluntary correction, failing which the RBI will not hesitate to act.
Hyundai Motor India unveils its offer for sale to raise up to 28,000 crore rupees approximately via an IPO that is set to open on October 15th. The implied market cap of the company would be at around rupees 1.5 lakh crores, is mostly in line with the peer valuation.
And the Consumer Affairs Secretary tells CNBC-TV18 that the notice to Ola Electric follows a year of complaints by customers and no inclination by the EV maker to address issues. Sources say that the Ministry of Road Transport may also ask Ola for an explanation on the growing customer ire. Good afternoon, you're watching Business Lunch here on CNBC TV18. I'm Hormus Patakia. With me is Vinny Motiwala, and it's for the second straight day, Vinny, that the screen is looking green, and it is a sigh of relief for the bulls.
Absolutely a sigh of relief. I'm also happy to see that there's some bit of a green. So yes, continuing and hoping for that green to continue, but not a bad day today. So surely an interesting one to watch out for, whether you look at the Nifty or even the broader markets. It's an interesting move.
Interesting day indeed. It's the second day of gains now for the Nifty, and a question now that comes up for is the fact that whether this 24,693 that the Nifty had slipped to is now the near-term bottom for the index, and from there the index has reversed. Now still holding on to gains of around 0.5% off the highs of the day though, which were around levels of 25,230, around 100 points off, but still holding on to gains of around 100 points. And this though is coming despite the lack of participation from the two biggest index heavyweights. Reliance Industries and HDFC Bank both are in the red in today's session, and still the Nifty is managing to hold on to gains. So where are the gains coming from? The gains are coming from Bharti Airtel, the gains are coming from ICICI Bank, the gains are coming from SBI and from Axis Bank. So barring the two index heavyweights, most of the other stocks are contributing to the gains. And there you can see footage on your screen, the management of Hyundai India gearing up to unveil its mega IPO, the largest issue in the history of the Indian markets. 27,000 crore rupees, Vinny.
Absolutely. 27,870 crores. Let's be precise. It's reaching the 28,000 mark. So yes, we thought LIC was the largest one, but clearly Hyundai coming to take that place, and largest IPO 15th October if anyone wants to subscribe for it. Valuations are also quite attractive, in terms of when you're looking at it for FY 26 as well. Interesting versus peers like Maruti and M&M. So keeping an eye on that. We'll listen into the press conference shortly as well. They'll be beginning to talk about it. But yes, surely watching out for Hyundai IPO. In terms of market share also, they want to focus on the EV market. They have a good market in terms of ICE engine, the cars that are there on that front. So that is something interesting that we are keeping an eye out on. Other than that also, when you talk about it, the promoters are actually the ones that will be selling the stake. So it's a complete OFS that we're watching out for this time. 14.2 crore shares that HMC, that's Hyundai Motor Corporation, the Korean parent company, will be selling their stake in the company. So yes, nothing is going to be going to the company as such. It's a complete OFS. The promoters are just looking to sell their stake. And at a time when, we've seen the PV market being so subdued, it's going to be interesting to see how this actually plays out. A lot of global OEMs have also highlighted, where the move is going to be. But press conference is something that we're watching.
A very interesting time that the IPO comes in, right? A kind of market moves that we have seen as well. But it's been a while since we had an IPO as big as this. Of course, the LIC IPO was back in May of 2022. So it'll be interesting to see what is the demand that comes in for this IPO as well.
Okay, surely we will watch out for the demand of the IPO as well. But let's also just, listen in maybe to what the management is saying right now.
Price band which got announced this morning, this is the largest ever IPO in India. This is also the largest IPO globally for 2024. This is also the first auto IPO in the last 20 years that has come to Indian markets. So really a history is getting created here today with all of you in the room. The Hyundai brand needs no introduction. It has consistently, over 15 years, been the second largest auto manufacturer in the Indian PV market.
The management of Hyundai, they're briefing on the largest Indian IPO. But we start off with some stocks that are buzzing in today's session. Divi's Laboratories is one of them, and that is on the back of a note from Citi. Ekta is joining in with more details. Ekta, Divi's exiting the Nifty and now getting a bullish call.
Well, yes, Divi's Labs is in focus because Citi has initiated with a buy and a target price of 6,400 rupees on the stock. Divi's, according to them, has secured its place in the GLP-1 APIs. This is as innovators look to de-risk their supply chains within that space. It can be an $800 million plus revenue potential for the company by CY30, according to the brokerage. Now, Divi's is likely to also be a key beneficiary of the supply chain diversification trend. This is as innovators are placing more confidence in the company, and this is reflected in new names that they've added in their custom synthesis business. For FY26 and 27, the EBITDA estimate is 3% and 12% ahead of consensus for Citi. This is driven by GLP-1 and new products in their custom synthesis business. The failure to scale it up is a key risk to the thesis that captures a bear case target price of 5,100 odd rupees.
Okay, thanks so much for that, Ekta. But Phoenix Mills is higher in trade on the back of its Q2 FY25 business update. What is it looking like? What are the key positives you're watching out for? Sonal is joining you with us.
Thank you so much for that. Well, it was a good update coming in from Phoenix Mills. Good consumption growth. So that came in at around 25% on a YOY basis. The retail collections also grew this time by 27% on a YOY basis to come in at 812 crore rupees. And their weighted average occupancies across malls, including the newer malls, came in at 92%. So considering the new malls also contributed to this, that is something that the street seems to like. In their hospitality segment, the occupancies improved for St. Regis to 85% versus 82%. The average revenue per room also increased by around 15%. For the Agra project or the hotel, that's where the occupancy came down, but their ARR, which is average revenue per room, was up 9% on a YOY basis. Even the first half numbers look good. Consumption up 25%, retail collections up 29%. And it was driven by strong performance in Phoenix Palazzo and Phoenix Market City, Mumbai. So these are two big malls where the consumption comes in from, and they have performed well in the first half. Nuvama says the entry now in new cities and operationalization of under construction or planned assets, and some of the assets that the company has acquired is the stock triggers going forward, and that is something that they expect to play out over the next few years. They have a buy with a target price of 1857 rupees a share. They continue to remain bullish on this name.
Bullish on this name indeed, Sonal. Thanks a lot for that. 5% higher now is Phoenix Mills. Now, Torrent Power too has fired up in today's session. The stock has doubled in value already this year. And this move today, though, is coming on the back of a 2,000 megawatt energy storage contract from MSEDCL. Vivek is joining in to tell us more. Vivek.
Well, absolutely right. So Torrent Power is the stock, that's doing quite well in the session today. The company, like you mentioned, has received the letter of award from the Maharashtra State Discom. Now, this letter of award is for a total 2 gigawatt of pumped hydro storage project capacity. Remember, earlier the company had mentioned that they had received an award for close to 1,500 megawatt, that is 1.5 gigawatt. So they have received.
We'll have to cut you short here. Let's just cut across to the management of Hyundai for their IPO briefing.
Through the key pillar of why we have the right to win continuously, including our future readiness in India, the most exciting auto market in the world. Lastly, we will touch upon our key financial highlights and the robust governance standards. Hyundai Motor Group has established unparalleled leadership in the global auto market. HMG has an iconic position as a global top 3 OEM with a brand value exceeding $20 billion. Also, our scale reached a presence in over 190 countries. This remarkable success is backed by our group's robust R&D capabilities HMG has established a centralized R&D hub that drive global initiatives with investment surpassing $26 billion since 2014. With our vision of a prosperous humanity, we HMI benefit from HMC's extensive global ecosystem, which gives us a strategic and a competitive edge against our competitors. HMC's early access to trending technology, supported by profound R&D capabilities, enable us to bring industry-leading features to the market in a short period of time. And our powerful Hyundai Motor brand provides us with exceptional global recognition and lineage that set us apart in the industry. Moreover, HMC's global platform offers doors to lucrative export opportunities, allowing us to expand into global markets and implement best practices to the Indian market. Our productive relationship with HMC is the key driver of our success and drive us to continue growth in the future. I will now hand over the presentation to Tarun.
India is not an easy market to crack, as is seen by very limited success global big automakers have achieved in India. However, Hyundai has successfully built the second largest auto franchise over more than 26 years of operations in India. We are an iconic brand with consistent double-digit market share. We're also the largest exporter on a cumulative basis since the last 2 decades. So we are actually a double-engine growth, domestic as well as exports. We have a large local dealer network with 2,900 plus touch points spanning across the length and breadth of the country. We have automated and flexible manufacturing with 824,000 capacity across model and powertrains. And last but not the least, we are driving industry-leading margins and growth at scale, as is visible from revenue of INR 698 billion plus and EBITDA margin of 13% plus. HMI's right to win is built on 7 pillars. First, democratizing access through innovation. We have something for everyone. Second, we are an award-winning brand with a track record of leadership. Third, we have a win-win approach across stakeholders, which gives us long-term sustainability. Fourth, we have a flexible, localized and automated manufacturing, which makes us more agile to respond to any market challenge. Fifth, while we are doing well today, we're also innovating consistently in processes, digitization, customer experiences, and technologies so as to be future ready. Sixth, we have been delivering growth at scale with industry-leading profitability and returns. And last but not the least, we have a highly experienced leadership team and independent directors. We are pioneers of introducing innovative features, promptly identifying trends on the back of our global experience and extremely strong local research. We have never accepted status quo right from the time we set foot in India when we introduced India's first tall boy design car, Santro. This design was primarily made keeping in mind the sari worn by many Indian women so that the crease will not be affected while entering or exiting the car. Then in 2002, we introduced CRDI diesel engine, which was much quieter, fuel efficient, and smoother than the conventional diesel engines that were prevalent in India at that time. Creta was indeed a game changer, which propelled India's SUV market and is still leading this segment with 30% market share. Introduction of ADAS raised the safety bar several notches up, and the Ioniq 5 with its unique V2L features raised the bar for EVs in India. India is many countries in one, and Hyundai has a car for every Indian. We have a balanced portfolio of hatches, sedans and SUVs, and of course, much higher than industry contribution of 65% plus from SUVs, which gives us better image as well as margins. Another extremely important aspect of HMI operations is the wide range of powertrain options that we offer to our customers. Customer preference in India vary hugely from state to state. For example, diesel is very popular in Punjab, Andhra Pradesh and Telangana, whereas petrol is popular in Delhi and Northeast, and CNG is popular in UP and Maharashtra. Presence of all three fuel options in our portfolio allows us to target all states well. Similarly, we have 1 manual and 4 automatic transmission options that again helps us to cater to preferences of Kerala and Mumbai customers who want more automatics and say Rajasthan and UP customers who want more manual.
The management of Hyundai Motor India briefing on their upcoming IPO. Time for a short break. Up next, we get you excerpts from an exclusive interview with the management of Zerodha. Stay tuned. Back on the other side.
Welcome back. You're watching Business Lunch on CNBC TV18. And let's move on. Speaking to CNBC TV18, Nikhil and Nitin Kamath of Zerodha talk about their 14-year journey. The brothers say they want to be a bank but are not able to be one. Hear out what they have to say.
Talk about the issue that you just raised on capitalism. And clearly you believe that the kind of capitalism that we're used to is not working for everybody, and that's the worldview that I imagine all three of you broadly sort of converge on. That brings me to the question of 14 years on, with the business that you've built, with the money that you're generating at this point in time, what do you see as the use of this? What do you see as the use of this organization? What do you see as the use of the money that you're making individually as well as at a company level? I mean, what will the next 14 years, for instance, for Zerodha mean from that perspective? Let me start by asking you.
Yeah, I mean, today I get really excited with all the startups we support. Like, there were 150 investments from Rainmatter, and we've allocated like 750 crores or something like that, you know. So, and Kailash gets really excited with the foundation. I'm also excited, but I'm not in it completely, you know, because I still haven't yet found the cause that I really want to support, as in, like, you know, something which is close to my heart. Yeah, so there also we committed a significant portion of our capital. I mean, the idea right now is to do 1,000 crores and then see how it goes. I mean, the use of money, Nikhil says, is to grow money, as in he does all the investments. So a lot of money in gold, a lot of gold and real estate, not real estate, sorry. Stocks and etc.
So you're making the money for them to be able to use it the way that they would like to use it.
Can I say something
Yes.
here? In a David versus Goliath world, where Goliaths are getting bigger, and I wouldn't like to say monopolies, but somewhere along those lines, I feel like we are still David in the story. We are these we're 1,000 people sitting in a corner of JP Nagar in Bangalore trying to compete with people who have a lot more access than us. We've been struggling for a long time to maybe get a banking license. We are subject to regulators who we don't really have any influence or access to. Their decisions can reduce our revenues by 50% in one day. They can make us shut down 6 months later. We still feel like somebody small in a corner of Bangalore who got lucky by being in the right place at the right time with the right people and everything else. But I don't think we're at a point in time in life where we can sit down and be like, okay, this is so much money.
Yeah.
What will we do with it? Because, like I said, we really want to be a bank. But however we have tried over the last many years, we have not been allowed to. Like that, we want to be so many other things and bring in products in so many other categories. So we're stuck in that place. I don't think we're in the, okay, ye ho gaya, abhi kya karna hai place.
And you can catch the full show, Young Turks Reloaded, coming soon only on CNBC TV18. But with that, it's a wrap on this edition of Business Lunch from Winnie, me and the team that put this show together. Thank you so much for watching. Midcap Radar comes up next.